Good morning. I hope you're doing well and welcome to today's edition of 600 Seconds of Trading. It's 9:05 a.m. in London and my name is Alejandro Zambrano, Chief Market Analyst with TradeCaptain.com. We're going to take a look at the markets as we usually do at this time of the day. I'm going to provide you guys with an overview of markets such as the euro dollar, Bitcoin, crude oil prices, gold, and the DAX 30. We're also going to talk a bit about the Fed rate meeting that happened yesterday and the implications of that. But before we start, I need to stress that trading financial markets unfortunately is risky, and there's a risk that we'll lose all of our invested money. So please bear that in mind. There's a little link here down here. As well, if you like this presentation, then don't forget to check out the technical analysis section where Nathan publishes content. And as well, I publish content in this section, and we have Yuri as well sharing his ideas on the market. So very similar stuff that what I'm going to cover now, you'll find it here. So make sure that you check that out. As well, we do have a webinar coming up. It should be on June 20th. So we're going to talk about trading patterns. So it says Forex stock trading patterns, but what's interesting is that these patterns were developed for actually developed for stock markets and or discovered in regards to stock market trading, and then Forex traders took them on. But you can technically use them for, indices, commodities, literally anything, even Bitcoin. I mean, they work really good on markets where there's less macro fundamentals influencing. So you want to assign that to that, and then we have this as well, applied short-term trading that is happening on June 28th. Okay, guys, let's begin, and we'll start with the euro. Okay, so the technical setup for you guys yesterday and the day before that, and even before that, was that around the 1747 level, I suspect the traders were gonna buy, and the market bounced here. This is the third time it bounces, and now it looks to me that we'll head to the upside, and I have a strong suspicion that we're gonna take out the 1840 level, which in the short term is probably just gonna take us to about 119. So this is an opportunity to scalp. Yesterday was the Fed rate meeting. It should have created a bigger reaction. The dollar should have been boosted because now the Fed are predicting that they're gonna increase interest 4 times this year. They already increased 2 times, so we have another 2 occasions this year as well. And it should all have been good. Literally all the forecasts for the economy, unemployment rate, inflation, they're all higher. But the market can't be bothered. So it's almost a bit of a sad day for sort of macro fundamentals. Macro fundamentals in general in the short term, they're not really good at sort of telling us what's going to happen. They can only tell us what's going to happen in the big picture. And in the big picture, yeah, I think the dollar is going to head to I think the dollar will strengthen. But, as I said in the past, I think we could easily go up to 120 and then maybe around 120. This is a weekly chart now. Maybe around 120 all the way up to 121, we create the right shoulder of this head and shoulders pattern, and then from this level maybe bearish back to 115, take out 115, maybe down to 105. But for now, it's a corrective move. ECB rate meeting is coming up. They will most likely be hawkish. I don't think they're going to be dovish, but if they are dovish and they take out the June 5th low, then this position is for that. In fact, it could potentially be possible to reduce sort of the key level, and if we take out 117, turning bearish from there. And that makes perfect sense, especially if we go higher, because if we go up here, then this becomes the last important low. But for now, let's not worry about the ECB. Let's just stick to the technicals. I think we're probably going to try to take out this high. And if one is scalping, one could either book profits now if you bought here yesterday, or try to keep it in the anticipation of the break to the upside. Also the pound that I've been talking about in the past, bottomed out here. Yesterday we had soft consumer price index, but the market didn't really care about that. Frankly, I'm really happy that inflation is lower. It's not nice the last year with high inflation in the UK. Technically, you know, it's still in a corrective move, so I still think this can go to the upside. But take a look at Bitcoin. Bitcoin prices bounced, and that will be normal that would happen. But a significant thing happened yesterday, a very significant thing. The market triggered closed below the April low, and people that bought here in Feb, people that bought here in April, they're all under pressure now to exit. And technically, the break to this level just opens up for further declines to most likely something like the high here, which is the 4,987 level, maybe followed by something like 4,000, which is a nice psychological level, and then maybe 3,000. Now, the way to trade this is to hold on to that view until proven otherwise. So the trend sort of turns bullish. Technically here, we're dealing with a very strong downtrend, and this is a high that is sort of the major trend defining level. But I think now, you know, traders that are bearish, they have been shorting on the back of the break here. I suspect they have their stop loss orders probably just about here at 6,930, but it's probably not a good idea to be too close to that level. And as well, I think, you know, traders that sold here, you know, it would be a bit unprofessional for them. You know, imagine you short here and then you're up with about 13%, and then the market swings back up. I don't think they're going to tolerate that. I think they're going to try to get out. And that could cause this market to push higher, sort of really dent the downtrend. So my new trend defining level is 7102, and using a 4-hour chart makes even more sense. Let me just see if I can show you. I can't. So this is sort of the level that people are actually watching, and we're up halfway. So yeah, I think we might go maybe a little bit higher, but honestly, I think this is probably it. Here, residual ratio wise, new traders, they risk about 8%. If we go down here, they make about 9. So that's a 1-to-1 residual ratio. That's a good start. Again, I think it can go a little bit higher, maybe 6,800 or something like that. But as long as you're below this level, I wouldn't worry too much about Bitcoin. I would definitely not buy it. There's definitely people that buy money, made money on these dips. Some guy, you know, probably got it lucky here. Some guy probably got it lucky here. But even a broken watch is going to be right. What is it? 2 times a day? Yeah, 2 times a day. A broken watch is going to be right. We're not in the game to sort of be right. We're in the game of making money. And for someone that's been profitable, I'll tell you, buying these falling knives, I mean, there's even an expression for it. Unless you know what you're doing, and unless you can say, look, I bought, last 30 times I bought these dips, and 15 of them were profitable, and when I made money, I made, you know, 5-10%, and when I lost 1-2%, then yes, you're good. I should probably pay attention to you and learn a bit about how to do that. But if one is not making money, then it's not the right way. It's the number one strategy that people use when they're trading, CFDs and Forex, and I think it's the reason why a lot of retail traders just lose money, because they buy when they should be selling, and they buy when they should be, they buy when they should be selling, and they sell when they should be buying. All right, this is crude oil. Nothing spectacular here, just increased sort of the trend defining level to 64.90. Sort of take that out and market probably hits the downside, okay? The technical trend remains bearish below this level, but I'm suspecting that we'll trade sideways. And my focus is actually starting to shift away from West Texas intermediate and focus on Brent. Why? Well, look at Brent. Brent is trading in some sort of a triangle pattern. I'm no expert. I know there's just 2 touches. Maybe we need a 3rd touch. I'm not sure. But I can tell you this without any doubt. This is a consolidation phase in Brent crude. And, you know, when we break sort of a pattern like this, you'll have some nice follow through. So watch 77.89. If we take that level out, we could potentially go up to 80, then probably lower again, and then probably to 84. On the other hand, take out 74.54, and the market could probably go down and then up, and then probably down to 68.47. How did I get these targets? Well, I used this pattern to derive these targets. And if you want to know more about that, then as I said, we do have a webinar coming up on the 20th at 6 p.m. Yes, it should be 6 p.m. London time. I specifically asked that we not that we don't host this webinar during a football game. So I think it should be between the first and the second game, or just like a break of an hour or 2. And that's when I'm going to host this half an hour. These 30 minutes could potentially help you in a big way. Next market we're going to focus on, it's going to be a price of gold. Now this is gold. Gold is turning sideways. There's not much happening here right now. Of course, if we trade below 12.89, the trend could turn to the downside. However, take out 13.07, and this market could head higher. Okay. Here's the DAX 30. And the DAX 30 is just being very problematic. The market is trading sideways between these 2 levels, and I wouldn't really get involved. Yesterday, what I did is that I was holding a long position in the US stock market, in the S&P 500 and the Russell 2000. And as you might remember, I did mention it in the technical analysis section. Bought a bullish break here. So I bought here, moved to the upside, and I even bought a little bit more at the high. But then I got rid of that yesterday in the morning, I think it was. And then following the Fed day, the market looked to me, I mean, it went up and then down and then slightly lower. So I decided to book profits there. My long-term bullish view on stock markets is not over. But if the S&P sort of moves down to 2740 or something like that, and then tries to build a base here, then that would not surprise me. As well, if the market just trades sideways and then takes out the high, then that would not surprise me. And I am right now looking to get involved, but I want to give this market a break for a few days. Here's another one which I had a very nice return on. So I bought here at 16.36, and I pretty much closed out at the low of yesterday at 16.76 or so. Again, it's not a massive reversal, but you know, I guess when you've been doing this for quite some time, you sort of develop a sixth sense. And when the market goes up like that, and then you have like that sort of bearish candle, and then goes up again, and then bearish candle, you see, it just moved out a little bit, did not move out too much, and you know, had a terrific winning streak from the lows here. Then it sort of hints a little bit, and then of course we just need to sort of think what's going to happen in 1.5 years from now with the Fed. You know, the increase 2 times more this year and 3 times next year. Well, the interest rate, was it going to be close to, was it 3.5, something like that? No. Yeah, almost 3%, I think it is. I mean, what's going to happen with the Fed, with the economy at 3%? Well, if inflation is not very high, the economy is going to get in trouble. And that is something that a lot of the bears have been talking about, and that's the reason why, you know, they're extremely bearish in general. But yeah, they will be right. You know, we just need to think about it from a common sense perspective. This market bottomed out in 2009, and eventually maybe we'll move down 30-40%. I mean, that would take you down. This is just 22% decline, and we're back in 2013 highs. I mean, if we go all the way down to 30% decline, maybe down to 1,100, then that would not surprise me if we have a recession. But we need to stick to the technicals. At one point, the market is going to give us a nice bearish reversal, and we'll turn bearish at that time. And those events, they seldom it goes up and then sort of tumbles. What I noticed, sort of studying prior market tops, is that the market will spend some time. Like here in 2007, the market hit the high in May, and then it revisited the same high 5 months later, and then literally 1 month after that, so about 6-7 months after we hit the high, the market declined to the downside. And I think we were very, very close to having something like this here in 2015, but you see the market sort of bounced back anyway. So yeah, I remain bullish, but I book profits, and if I can, I like to get involved at different levels, better levels. Okay, we don't have any questions, not even a single good morning. Come on, guys. Most welcome to interact here. What else? Want to wrap things up, so don't forget to hit that like button. Very straightforward. Click like here. That's nice. And as well, if you like to follow me on Twitter, then this is my handle, AlexFX00. So check that out. Okay, have a good day, and thank you very much. And I'll see you guys tomorrow at 9 a.m. London time here at the live trading room at tradecaptain.com. Thanks.